Melbourne's property market is undergoing major change, with unit sales outperforming houses in more than 100 suburbs.
All housing markets in Melbourne are now officially out of reach for average wage earners.
Melbourne's property market with more than 1,200 homes going under the hammer.
As Australia's second largest city, Melbourne's real estate landscape has seen its fair share of ups and downs. Join us as we explore the current state of the market, uncovering the trends that may determine whether it's a boom or bust for property investors. Melbourne, known for its diverse culture, stunning architecture, and vibrant lifestyle, also boasts a dynamic property market. From the trendy suburbs like Fitzroy to the upscale areas of Toorak, there's apparently something for every type of investor here. But what is the current state of affairs in the Melbourne property market? Let's have a look at the numbers. Over the past year, Melbourne has experienced small growth in property prices. However, this doesn't tell the whole story. Factors like interest rates, inflation, government policies, and economic indicators play a crucial role in determining whether this growth is sustainable or if a correction is on the horizon.
Melbourne is today in its 235th day of shutdown since the pandemic began.
The Reserve Bank lifting official interest rates to a 9-year high.
More than half of all households could fall into mortgage stress if interest rates rise again.
The cost of living crisis has been building for months.
Melbourne's property market faced a perfect storm. Economic fallout, prolonged lockdowns, interest rate hikes, and non-stop media coverage. Every 3 months we get a different narrative in the market, and it's led us to be very responsive. Let's take a look at the years of 2019 to 2022. Okay, I'm going to recount here what I experienced. Keep in mind that markets vary from location to location. Even here in the outer suburbs of Melbourne is noticeably different than what's going on in the inner ring suburbs. In late 2019, I could feel the interest in buying start increasing through client queries for mortgages. This felt about right, as the rest of Melbourne's property market had already experienced a bit of an uplift. There was also an air of optimism as the first home loan deposit scheme was introduced on January 1, 2020, which was fueling the local first home buyer market. Enter the big C, COVID. Buyers went from high intent to no intent come April, May. This pushed a lot of negativity, so governments rolled out the gravy train, access to super, waiving home loan repayments, waiving rent payment for small businesses, handouts of all sorts were given without the thought of the word inflation. Next minute, we're still in lockdown, but now people are buying properties sight unseen. At this time, people are also scrambling to get through the ring of steel, and now places in Country Vic that are used to being on the market for, say, 12 months are disappearing as quickly as they're being listed. Back to Melbourne, the city that once stood as a resilient bastion in real estate now found itself grappling with unprecedented challenges. The economic fallout from the global pandemic, coupled with Melbourne enduring some of the longest lockdowns worldwide, created a daunting environment for its property market. And as if that wasn't enough, we faced 13 interest rate rises in a row, plummeting consumer confidence, and the barrage of negative media messages, a relentless conveyor belt of obstacles that tighten lending restrictions. And unbelievably, despite all this, property prices have stood up reasonably well. Fast forward to 2023 and the narrative is changing once again. CoreLogic's daily home value index reports a 0.5 increase in October, PropTrack notes a 0.28 monthly climb, and Dr. Andrew Wilson's My Housing Market reveals a 0.3% rise in house prices. Melbourne has seen 9 consecutive months of increased median property prices. After all this data and all this positive sentiment in the media, I have to point out that these gains are not even meeting the inflation rate. So whilst things aren't as negative as they seem to be, they're also not as positive as they seem as well.
New figures showing a sharp slowdown in inflation. Some economists are now tipping multiple interest rate cuts this year.
Inflation is coming down, but it's not coming down quickly enough for the RBA.
To truly understand the direction of Melbourne's property market, we need to examine the economic factors at play. The Reserve Bank's interest rate decisions, inflation rates, employment rates, and overall economic health all contribute to the stability of the real estate sector.
Over 700 people who have already got to that process of finding their home and in the process now of settlement.
The Queensland Government could give developers tax exemptions to help ease the housing crisis.
Governments play a significant role in shaping the property market, with policies and regulations acting as steering forces. From first home buyer grants to tax incentives for investors, these measures can either fuel a property boom or they can put the brakes on excessive growth.
Low and middle income earners appear closer to securing a tax cut tonight.
This will be an incentive for labour supply, and that is one of the things that has been a major issue.
The tax cuts won't begin until July, but with rents at record highs now, there's new pressure for more housing solutions in the budget.
On the negative side, you have all these new taxes and tenant-friendly regulation coming in. Add the bailing out of the Commonwealth Games into the mix, and it's easy to see a future where Victoria doesn't attract the investing capital it used to. On the positive side, you have governments and their schemes ready to prop up the market at the worst of times and push the market to record high at the best of times. And we all know how state and federal governments love to get their hands dirty when it comes to the property market. One of the fundamental principles of economics, supply and demand, has a direct impact on property prices. Melbourne, like the rest of the country, has been grappling with the housing supply shortage, particularly in certain high-demand areas.
Melbourne has been one of the softer performers towards the end of 2023.
We've got a huge increase in demand from population growth. The supply is very weak.
As Melbourne embarks on its journey towards recovery, the city's population growth emerges as a significant factor. Projections indicate that Melbourne's population is set to grow by 1 million people in the next decade, adding to the 1.7 million increase already witnessed this century. The Federal Treasurer's Centre for Population foresees a Melbourne with 6.1 million residents by 2033, with a substantial contribution from net overseas migrants. This surge in population places added pressure on the already dynamic property and rental markets. On this part, the demographics are really hard to argue with. Melbourne's property market, akin to its diverse neighbourhoods, exhibits a range of performances. The inner and outer east stand out as outperformers, contributing to the city's overall recovery. A discernible flight to quality is witnessed, with A-grade homes and investment-grade properties experiencing strong demand. Auction clearance rates remain robust, underscoring the underlying strength of the market and affirming Melbourne's status as a resilient real estate hub. Do I like this? No. Property prices are overvalued if you look at yield. The only reason you would invest in Melbourne is for capital gain, which is just another term for speculation. Just because I think it's overpriced, it doesn't, however, mean that it's going to come down.
Putting a roof over your head in Melbourne has never been tougher. Rent listings have dropped more than 20% in the past 12 months.
More than 1,000 homes have been removed from Melbourne's rental market as rising costs force landlords to sell up.
However, amidst the positive signs in Melbourne's property market, challenges persist in the rental sector. CBRE's estimates suggest a lower delivery of apartments compared to Sydney, contributing to a supply-demand imbalance. While house prices show resilience, Melbourne's rental market experiences headwinds with historic lows in vacancy rates. Rental rates have surged 23.1% in the last year, leaving tenants grappling with affordability and availability issues. In our interconnected world, global events can send ripples through the local property markets. Whether it's a pandemic, geopolitical tensions, or economic crises, Melbourne is not immune to the influence of the wider world. Even after the recent COVID years, I still don't think we've learned our lesson. When you go almost 30 years without a recession, it makes it very hard for people to comprehend these risks. Now that we've explored the various factors shaping Melbourne's property market, the big question remains, is it headed for a boom or a bust? Unfortunately, guys, I think it's more probable we get an extension of the trend here. I don't like it, but that's what I see at the moment. As mentioned, there's a property predictions video recently published on the channel, and I'll link it in for you to get a more detailed explanation on my perspective. Melbourne's property market is a dynamic landscape shaped by a multitude of factors. As an investor, staying informed and adapting to the changing conditions is a crucial factor here, especially if you've got negative cash flow. As a spectator, it's captivating to see just how wild things get before it changes back to a more healthier place. If you found this episode informative, don't forget to give it a thumbs up. And for more insights into the property markets, please subscribe. Until next time, happy investing. Cheers.